Bring Sam back into the conversation. Welcome in our next guest to discuss the housing market. Joining us now is Daryl Fairweather, the chief economist at Redfin. Daryl, thank you for being with us. I saw this report out yesterday, saying that sellers are taking their homes off the market at the fastest pace we've seen in nearly a decade. Can you walk us through some of your recent findings and the trends that you're seeing overall in the market?
Yeah, that's right. We're seeing more and more listings come off the market, and it's really because home sellers and home buyers can't see eye to eye. Home buyers can't afford to buy at these high prices because of how high mortgage rates are, but home owners don't want to accept less than what they think their home is worth, and they have these record low mortgage payments that they got back during the pandemic, which gives them an extra reason to take their home off the market and either stay in it or rent it out to somebody else until they feel like the market is more in their favor. So it's really a stalemate. We're not seeing as many price drops as we normally would when the market is as much in buyers' favor, because sellers are just taking the ball and going home.
But Daryl, you can, I suppose, appreciate why people are so confused, because you hear about people taking their houses off the market, yet there's not enough supply for those buyers who are currently out there. But then you hear about how there's not enough demand as well, because there's still people sitting on the sidelines sort of waiting for interest rates to come down. Can you just give us a sense of where the supply-demand dynamic is at right now, what you're seeing out there? Because I suppose it depends on where you are as to what the demand is really like. Because I know at least around here, I'm here in New York City, in the New Jersey area, things are just selling like hotcakes in a matter of days.
It really does depend on what market we're talking about. The markets that are more in buyer's territory, like Florida and Texas, that's actually where we're seeing sellers take their homes off the market more, because prices have come down there and sellers realize that they aren't getting the offers that they want because they're having to compete with other home sellers who are willing to cut their price. So if a home seller isn't willing to cut their price to compete, that's when we see them come off the market. And markets that are more in sellers' territory, like it sounds like New York is and a lot of the Midwest is, sellers are happy with the offers that they're getting and they don't need to take their homes off the market. What we also see is that there are lots of condos for sale and lots of apartments to rent. And if you're comparing a condo to an apartment, it's usually pretty clear that it's cheaper to rent the apartment. So when buyers aren't able to negotiate with sellers, they're also deciding to leave the market and choose to rent for longer instead, because it's more affordable for them to just do that.
And I saw, the active listings are up. That number is higher. But you say that true supply is tighter than it looks. And Sam was just mentioning some of it can be confusing. That's a bit of a misleading signal. Why is the market giving that off right now?
Yes, when you look at just the total number of homes that are for sale, it looks like we are in a buyer's market because there are more homes for sale and there are buyers out there. But a lot of the people who are selling those homes are being pretty unreasonable. They're charging too high of a price with a listed price, and then they're just letting their homes sit on the market. And then when those homes don't get offers at the prices that they're listing them for, they're pulling them off the market, which means that those homes, they were never really reasonably for sale to begin with. Those sellers just aren't willing to negotiate, and buyers are just having a tough time flexing their negotiating power when sellers would rather just take their homes off the market.
Daryl, I think it was a couple of months ago I spoke to your colleagues over at Redfin who were talking to me about the rate of buyers getting cold feet, actually reneging on some of their contracts. And that was on a sort of confluence of factors, feeling a little bit uneasy about where the economy is at. And yes, okay, suffice to say, this was prior to the interest rates coming down. What are you seeing as far as that trend right now? Because it's interesting, I've actually been hearing this from other real estate agents, not even just here in the US, in other advanced economies as well.
Yes, it's another symptom of buyers and sellers not being able to see eye to eye. So even when a buyer makes an offer that a seller accepts, there's still that escrow period where there could be an inspection. And in a state like Florida, what often happens is that during that inspection period, a buyer will find out whether or not they can get insurance or what they need to do in order to get insurance. So sometimes these insurance providers will say you need a new roof, and that roof might cost $50,000. So the buyer goes to the seller and says, hey, It's going to cost me an extra $50,000 compared to what I thought to actually afford this home. Can you make me whole? And the seller says, no, I'm not going to pay that money. You have to come up with that money. And then the deal just ends up falling apart. That's one example, but there are lots of examples of something happening during the escrow period that means that the negotiation isn't really going the way that either party thought, and then things just end up falling apart because there's not enough of a mutual benefit to the sale to begin with to see it through.
So, Daryl, what needs to change then to get both sides of the market moving? Is it rates? Is it inventory? Is it wages?
Rates coming down would certainly help because a lot of the people who are selling homes, they want to be buyers again. And that's why they're holding out for these really high prices, because they want more proceeds from the sale to put towards their next home to lessen the blow of those high interest rates. So if interest rates came down, sellers would be more willing to accept a lower price, and buyers would be willing to pay more because they could afford to pay more. So if interest rates were to come down, that would get buyers and sellers back on the same page. But the gap is still quite large between the interest rates that homeowners have and the interest rates that buyers have to pay. And interest rates came down recently, but it wasn't by enough to really make a meaningful difference in the market. We would need to see more movement, like 5% 30-year fixed rate interest rates, to see the market start moving again.
Well, Daryl, we appreciate you taking the time to be with us today to talk through the housing market ahead of the holiday. Sam and I both wish you a happy holiday as well. That's Daryl Fairweather from Redfin.